Hey everyone, welcome back to the channel. Today, we're going to be talking about a controversial topic.
Nobody likes it. Nobody likes it, Sam.
Rates are at 8%. We're going to talk about all that and more right here on the channel, so stay tuned. Hey everybody, welcome back to the channel, or if you're new, welcome to the channel. If you didn't know, this channel is where we talk about everything related to where to live, work, eat, play, all right here in the Colorado Springs and Pikes Peak region. So if that's something that's interesting to you, please consider subscribing, hit the notification bell so you don't miss any of the future updates. We're posting about twice a week usually. So yeah, make sure you get in on that. But also, if you didn't know, we are licensed realtors here in the state of Colorado. As much as we love making these videos for you guys, giving you all the info, we love selling homes. We love helping our clients find their dream home here in the Colorado Springs and Pikes Peak region. So if that's you, if you're considering a move in the future, please reach out to us. All our information's in the description box below. We are the guys who answer the phone calls, emails, text messages.
Every day.
We will get back to you if we miss you, so make sure to reach out to us. But without further ado, let's go talk about the hard things.
8% rates.
8% rates.
Now, if you guys have watched our videos much, or maybe seen a market update that we've done over the last year plus,
Yeah.
I've always said that the housing market, will continue to be awesome here in the Colorado Front Range area, unless there's a broader economic issue.
Yes.
And man, have we seen it.
We have seen the broader
Old Federal Reserve.
issue. That's right.
Messing up our days, but
St. Powell.
right, yeah, exactly, yeah. Hey, we all know that, there's other economic issues going on in the U.S. right now. Inflation's got a little bit crazy, so the Federal Reserve is trying to stifle that by tweaking some rates. And yes, we know it's not they don't direct mortgage rates,
Yeah.
but they direct things that do affect mortgage rates. So
Exactly.
that's what we're seeing right now. And yeah, we just have to accept it. Rates, I looked yesterday and it was 7.875 for a 30-year fix with I think it was with a 720 credit score. So pretty good credit. Not the best of the best, but by no means a bad credit score. So we're just going to round up and call that 8%.
Yeah.
Because it doesn't make it really sound any better at 7.875.
Yeah. And
So-
for any of you econ nerds out there who watched the last meeting with the feds,
Oof.
St. Powell himself, halfway through the meeting said, we are nowhere near the top of where interest rates are going. We're
Raising-
nowhere near. We are prepared to go much further.
To the moon and beyond.
To the
Bumped in
moon and
another
beyond.
3/4 basis points.
Yep.
So
And they're talking about another 50 basis points before the end of the year. So let's talk about what the heck do you do when rates are at 8%?
yeah, I think we could just end the video and say, buy cash or don't buy a house.
Yeah.
But that's not the end of the video.
No.
In all honesty, yeah, like it's not a good environment with interest rates right now when you're looking to buy a house. But you have to get in the right mindset of that's the rate is one piece of the overall pie, if you will.
Yeah.
And I mean this sincerely, like these are my thoughts and ideas, not as, hey, I'm a realtor and I want to sell more people houses. I invest in real estate. I'm actively buying real estate right now. Investment loans are 9% plus. So
Yeah.
there are things that you can do with the right mindset and the right techniques to make sure that you, number one, keep yourself in a good financial position. Don't overextend yourself. Don't do anything silly. But there are things you can do in this environment to still set yourself up for success. So
Yeah.
mindset, it sounds cliche, but that's the number one thing. You've got to get in the right mindset of, hey, the rate, it's one piece of the pie. It's not the end all be all. Let's see if there's a potential solution that works.
Absolutely.
Sometimes there
100%.
is, sometimes there's not. You
Yeah.
know, just facts of the matter. Sometimes there may not be a solution where it makes sense for you to buy a house right now.
Yeah.
And if that's the case, like you just have to accept that and just kind of move on and wait for things to change.
Yeah, and absolutely. To your point, if you're one of the people that's reaching out to us, we consider ourselves kind of guides and consultants as much as we do just realtors. And
Yeah.
so if something isn't making sense for you, it's not making financial sense, we're not going to sit there and, kind of shove you into a transaction that isn't going to be good for you financially at the end of the day.
People to say bad things later down the road, man.
No,
nobody wants that.
Absolutely not. We don't want anyone to be in a bad position at the end of the day. And so again, this is just, our thoughts kind of on the market right now and different solutions that you can kind of go explore those options to see if it is going to be a fit for you at the end of the day, in consideration with the rates being so high at this point. Again, I just bought my second house too.
Yeah.
My wife and I just bought our second house, trying to figure out right now what we're going to do with the first house, whether it is sell it or, go ahead and rent that house out and kind of be an investor on that side. So, kind of getting two different perspectives.
Yeah.
Someone who's just kind of getting into investing themselves and someone who's been in that place since the market was...
Since the 2007-8 time frame, yeah.
Exactly. So, let's just kind of jump into it. What's the first piece of advice, I guess you could say?
I think this is where it's a benefit to be a buyer right now is negotiate.
Yeah.
We haven't been able to for 2 years.
Yeah.
I've loved listing homes over the last 2 years. It was honestly a little bit easier process than normal, and you kind of seller picked a number and you said, yeah, sure, somebody will probably pay you that for the house, and somebody did pay you that for the house. Not the case anymore. So just realize that as the buyer, you have a lot more room to negotiate than you did previously for the past 2+ years.
Yeah.
And you've got to take advantage of that, and you have to not be... it's a balance, right? Like you can't be overly aggressive with it, and then you upset the seller and they never want to sell you a home ever again, especially the one they're trying to sell you right now. But you don't want to leave any money on the table.
Yeah.
So you want to be aggressive about it. It's just kind of a balance there. And I think a lot of people get tied to just the price of the home. Yeah. But there's a lot of other things you can negotiate in the contract.
Yeah, 100%. So, the first thing I would say too is just kind of figuring out what it is that is most important to you at the end of the day. Is it the monthly payment? Is it your cost to actually get into that home? Is it, things, or I don't want to say amenities, but, is there something outside of just the financial piece that's motivating you? Do you need to be in a home today or tomorrow? Or, do you have, some room to be able to, kind of wait things out a little bit? And so figuring those things out is going to be the first piece. But to your point, some of those things that you can do that we're seeing a lot of right now that can be very beneficial to buyers, seller concessions.
Mm-hmm. Yep.
Seeing a lot of those right now. And so seller concessions would be basically money given up from the seller out of their proceeds at the end of the transaction. And you can apply those toward things like your closing cost. As long as you check with your lender, you can apply those toward things like a rate buy down. Mm-hmm. You can apply those things towards something like a 2-1 buy down. We'll talk a little bit more about that here in a minute. And just so you guys know, your closing costs, that's an encompassing term, but that's going to include things like your title fees and like your title recording fees, your title insurance, any of your escrow funds. I believe the closing or seller concessions can go into escrow funds as well. Your origination fees from your lender, any of the underwriting fees from your lender, things like that are what the seller concessions can be applied to. And so that might be a strategy that helps you get into the house a little bit cheaper. Or you could go the other route with those funds and buy your rate down a little bit. And you'll definitely want to talk with your lender about the different nuances with that, because how much you can actually have the seller contribute is dependent upon how much it is that you are putting down at that time. So definitely chat with your lender about that. But if you're more concerned about the monthly payment, you might want to consider going that route of using those funds to buy your rate down in some way, shape, or form.
Yeah, I think that, there's a ton of different ways to negotiate a real estate contract. A lot of people, like I said, they get wrapped up on the purchase price. And that they kind of just like, that's what it's a big number, right? So that's makes sense. So that's kind of what we all focus on.
Yeah.
But like seller concessions, getting some credit from the seller to help offset some of your other costs. And then if you can do that, being savvy with what you do with those funds.
Yeah.
So just understanding that you can negotiate. You haven't been able to for a while if you're buying a house, but now on the buy side, you can negotiate some. And another thing to think about is if you're buying a resale home, a lot of the times it's, the home price, but then you might have some things that you need to do to the house.
Yeah.
Maybe some repairs. And again, the last 2 years, buyers really didn't do much. You get a home inspection done as a buyer, and the seller the seller wouldn't do much. The seller would say, whatever, if you don't want to buy this house as is, the 10 people outside do. So we're not going to fix anything. But now you have some negotiation power on the inspections as well. So, and while that doesn't necessarily tie exactly to rate, it does tie to your overall price of home acquisition to get the home that you want at the end of the day. So maybe you don't have to do some of those repairs.
Yeah. For example, if I may.
Yeah.
Getting into our new house, right? One of the things that we really wanted to address was the electrical panel and some of the electrical work in the house. We had already maxed out the concessions that we could receive to actually apply towards closing costs and rate buy down. But we were able to get further concession with permissions and kind of proof of funds from the title company by saying, look, here's the people we're going to use for this project that needs to get completed. Here's the people we're going to use from this project that needs to get completed. Here's their bids or their estimates. We turn those into title. We were able to get a check cut back to that vendor at closing.
From the seller's
proceeds to help us out with some of those repair costs.
Yeah.
And so we were able to actually kind of do a combo of both where we reduced our costs for acquisition of the home and reduced our monthly payment by using some of those other concessions to buy down our rate a little bit. So
yeah, that's a great example of exactly what we're talking about. Like negotiated, did a combination of, hey, we've maxed out what we can use over here. How else can we do this to try to make our overall all in at the end of the day lower?
Yeah.
So a couple things, because we're talking about rates, a lot of the stuff is tied to a lender. So let me first say, we are not mortgage loan originators. We are licensed real estate agents. We know enough about loans to be a little bit dangerous sometimes, but please, if you have more detailed questions, reach out to us about it, about those questions. And if they're questions that are beyond our scope or what we're comfortable answering, we'll definitely put you in touch with a great local lender or two that you can have a further follow-on conversation with if that would be beneficial for you. Yeah. Again, we have good ideas based on what our experience level is, but because we're not licensed loan originators, we just kind of want to throw that caveat out there to you.
Yeah.
So a couple things that you talked about that I think are great ideas. The first one is just simply buying down your rate.
Yeah.
So what does that look like?
Yeah. So buying down your rate. Let me see if I can break this down in a way that's going to make sense on camera here. So for every percentage point that you buy down your rate, right? Let's say you're getting quoted a 7.8% rate today, and you want to get your loan down to 6.8% because that's going to affect your monthly payment amount by X amount of dollars, whatever that is. For every percentage point that you buy your rate down, there is a cost per basis point that gets paid to the lender to buy that rate down then. And so what that looks like is you would tell the lender, I've got, this much of the purchase price, 3% of the purchase price that, we can use, or 5% of the purchase price that we can use. How much would that buy my interest rate down to then therefore decrease my monthly payment? And so the language, especially if you're looking this stuff up online, gets really, really confusing between what buying a basis point means and what buying your actual interest rate down means. So that's the first caveat or first nuance that I would, kind of recommend just familiarizing yourself with is basis points are different from your actual interest rate. Typically, depending on how much you're putting down, you're going to have a max that the seller is able to contribute based on how much it is that you're putting down. And so you want to chat with your lender and say, okay, I can get this much money. How much can this buy down my actual interest rate? And then therefore, how much does that affect my monthly payment?
Yeah.
Yeah,
I think that's the general concept is if you want to get a lower interest rate, there's a dollar figure associated with buying a rate down X, whatever it is, say, to make it simple, a whole percentage point on your interest rate. There's a number associated with that you can pay that much money and the lender will reduce it that much.
Yeah.
I think a big thing that people have to think about, and this is where I say, like, with 8% rates, 7% rates, whatever it is, you got to kind of think outside the box a little bit. Because if you buy down a rate, and I've done this before, you just have to run the numbers. Because if you say, hey, I'm going to buy down my rate from 8% to 7%, and that's going to save me, these are hypothetical numbers, that's going to save me $500 a month. But it cost me $10,000 to do it. Yeah. So now I know that what we call your recapture time is 20 months. Because it's going to take, at $500 a month, it's going to take you 20 months to break even with the $10,000 that you put down. So then you've got to think, how long am I going to be in my house? If you're not going to be in your house at least that long, then it doesn't make sense. You should just pay the higher rate because you're planning on selling your house anyway. But if you're going to be in your house for a longer period of time, a lot of the times it'll make sense if you have the funds available or if you can negotiate it with the seller to buy down that rate because you're going to be in a home a longer period of time. You're going to recoup that money over time. So rate buy down is a big thing. I almost think that some people think, they jump at it too much because they haven't thought through how long am I going to be in a house.
Right.
And again, that's a real simple scenario I just presented. That's 20 months to recapture, so a little less than 2 years. But the numbers might be different. It might take you 5 years to make up the difference of what it cost, and you're only planning on being in the house, 4 years. So just really thinking through all the different facets of it. You don't want to just like how you don't want to get stuck on just the rate as the only thing you consider in the overall transaction. You don't want to think about buying down the rate just to get a lower rate. You really need to look at that time horizon piece of it as well. So
absolutely.
Again, like Sam said, it's kind of tough to explain it all real simply on camera, but just know buying down the rate is a possibility, but there's a few caveats you need to think about.
Yeah, absolutely. And you definitely want to have that conversation with your lender, have that conversation ahead of time with your lender so that you're not scrambling in the middle of trying to do everything else that you have to do in a transaction to figure out what it is that you want to do with that financial piece there. Because Chris brought up an important point there. When we're talking about permanent rate buy downs, and we'll get into what I mean by that a little bit more, you yourself as a buyer can purchase those things for a permanent rate down, or you can have the seller give you some concessions that you can apply toward that permanent rate buy down, or you can have a combination of both. So you definitely want to make sure that you're digging into the nitty-gritty details, if you will, with your lender about all of those things.
Yeah, for sure. Yeah. So that's a rate buy down. The next thing I kind of think of is lender credits. So, we talked about seller concessions. The credit comes from the seller out of their proceeds. You can also have a conversation with your lender and see if they have any lender credits that they can offer you. A lot of times, and you wouldn't do this in this environment very much, but in a lower interest rate environment, it's super common to ask the lender to give you some credits to help offset your closing costs, your initial money out of pocket, and take a little bit higher rate, maybe a 1/4 point higher on your rate to get some money to cover your closing costs.
Yeah.
Again, not really popular right now, but if you're in the situation where maybe you don't have a lot of money saved up, but maybe you got a brand new job. So you're super confident, hey, I'm going to have plenty of money. I just don't have it right now. And I'm going to have plenty of money for my new job. My monthly payment isn't the biggest concern. So I don't mind a little bit higher rate. I just don't have money to pay out of pocket right now. Now, there's still reserves that you have to make the lender happy and things like that. But just know that lender credits can be something that you should talk with your lender about. And just maybe they have a special, maybe they have a deal, and they say, hey, if you're a veteran, you can do a VA home loan. We pay $1,500 towards your closing cost. Whatever it is, just make sure you ask the lender those questions to see if they have any credits available that can help offset some of your initial closing costs, money out of pocket. And then maybe, like I said, not as common in this environment, but you could always ask them, hey, let's run a scenario if I took a rate at 8 1/4. Could you give me some concessions back to help offset my closing costs? So just lender credits, that's kind of the key term to think about.
Absolutely. Absolutely. Now let's talk about one of the more controversial topics that are out there, refinancing. And thoughts around that.
Yeah. So I'm going to say the saying,
okay, even though
it just bothers me. I don't know why, but there's this concept, and you probably hear the saying, if you Google any of this stuff, it's called date the rate, marry the house.
Yeah.
The rate is not a permanent fixture. We all know that rates transition. They go up and down. If we look back to bought my first house in 2005, and I think my rate was 6.5% on a VA home loan. So not too far off of where we're at right now, a little bit. I still own that home as an investment property, and my rate's 2.9%. So over time, rates go up and down. I think it's very, very likely that rates will be high for longer than we want them to be, but not in perpetuity. The rates will go back down. The economy will change. And when that happens, you'll have the opportunity to refinance your house. Are you going to refinance it at 2.5% like some of us did 2 years ago? I don't know if that's coming back around anytime soon, but I think it's very likely rates will get back down into the 5s in the next couple years, and you can refinance your home. Now, there's a cost associated with that. Yeah. Depends on home price and blah, 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 but, call it $5,000 for easy math. And you can figure out what your monthly payment savings is and how long it takes you to make that $5,000 back. If you're going to be in the home for a while, it probably makes a ton of sense. So, again, people get so wrapped around the axle with the rate today that they're paying, and you got to kind of take that step back and say, you know what, I'm going to be able to refinance this rate. Probably not tomorrow. Don't plan on it happening in 2023 probably. Yeah. Typically, the general consensus is that the rate needs to drop about a full percentage point to make it worthwhile to refinance to offset your closing costs you have to pay again. So you buy today at 8%, mid 2024 rates are down to 6.75%. You could refinance it and save yourself a lot of money on a monthly payment compared to what you're at right now. So I personally am a huge fan of just the fact that you can refinance, and that's always something that's on my mind is, hey, this rate, this 8% number, not permanent.
Yeah, and you can also always refinance into a different product at the end of the day too. So that's something to be aware of. This is, again, a conversation that you got to have with your lender at the end of the day, and make sure that you're getting into all the nitty gritty details, because there are pros and cons to refinancing. Like Chris said, there's an upfront cost associated with refinancing. How long does it take me to recapture that cost in my savings? There's some people would view it as a con of when you refinance, you're going back into a 30-year if you stay within the same product. And, that's essentially like a piece of what is going to make your monthly payment cheaper. And so, again, there's pros and cons. You want to make sure you're having that conversation with your lender. And I know a lot of people right now are, you can't bank on refinancing, and why would you ever even talk about that? Well, because it's an option that can help you out at the end of the day. Depending on what your goals are. I was working with another realtor in the office, and we were doing, the hard math of what's actually better at the end of the day, a permanent rate buy down or a price reduction. And as we were looking at the rate graphs, as we always say, past performance isn't an indicator of future performance always necessarily. But as we were looking at the rate graphs over the years, in the mid 80s, we saw,
double-digit
18% rates, at the end of the day. But what we found is basically within any 5 to 10 year period, rates always had a peak and they always had a trough. Yeah. And so it's just something to keep in mind. And again, talk it out with your lender and decide what's best for you financially at the end of the day.
Yeah. I think one more thing I'll say with that, and it's going to tie into the next thing that I want to talk about. With the refinance piece of it, just keep in mind, and this is a good thing about more strict lending guidelines of what we used to have, is that you don't want to go into it with the assumption of, hey, I can squeeze this monthly payment for a couple years if I have to at 8%, but once it goes down to 6%, I'll be cool. Yeah. You don't want to assume that that's going to be the case. You want to make sure that whatever you decide to do today, that you can handle it financially. It's not going to put you in a bad position. If you lose your job, you're not going to have to foreclose on your house, 6 months later. Just don't ever put yourself in that bad position with the assumption that rates are going to go down drastically in the near future. Yeah. Again, lenders are pretty good about this now. They're not going to qualify you for it if you really only should be at X payment and now it's Y payment. Yeah. You're going to have to qualify for it. But again, you just don't want to put yourself in a bad financial position. So another thing that we hear a lot of now, and this wasn't even a term ever before that I've heard until the last few months probably, but it's called a 2-1 buy down.
Yeah. Super interesting.
It is. So a 2-1 buy down, this is my understanding of it from the lenders that I've chatted with and the clients that we've had investigate this, is you're essentially, for the first year, your rate's going to be 2 points lower than what it could be. So say if it's 8% right now, normally it's going to be 6% when you purchase the home. And then after 12 months, it's going to go up to 7% for that second year. And then after that, starting in the third year, it's going to go back to 8%. So 2-1 buy down. So the first year you're buying your rate down 2 points. The second year it's coming down 1 percentage point. And then the third year it's at whatever rate of the day was when you purchased. So in the scenarios we've been talking about, 8%. This comes at a cost, as you can imagine. A lender essentially, and I don't know if this is true with everybody, but it seems like most lenders, that amount that it costs to do that buy down is just about what the difference of mortgage payments would be. So if you save $200 a month for that 2 years, whatever that number comes out to, that's about what they're going to charge you to do the 2-1 buy down. But it gets you a lot lower monthly payment right off the bat.
Yeah.
And a lot of the thought process behind it is, I do a 2-1 buy down.
Yeah.
I've got a 6% rate right now, 7% next year. Somewhere in that first 2 years, rates are probably going to dip, and then I can refinance the property.
Correct.
So my rate has, I never actually paid the 8%. Now, again, this comes at a fairly significant cost, $10,000, whatever the number is, depends on purchase price, obviously, how much money you're putting down. But it's a product you should explore, especially because we go back to the point we talked about. You can negotiate and try to get some seller concessions. So get the seller to credit you a little bit so you can buy that, get that 2-1 buy down to have that lower mortgage payment right off the bat.
Yeah.
But a good thing I think lenders are doing is you still have to qualify based on that 8% rate.
Yeah.
Because they don't want people to get in the position of, I can qualify for it at 6%, 7%, maybe I can do it. I really couldn't make my payment at 8%, but hopefully things change by then. We don't want to roll those dice, and lenders won't let you roll those dice. Yeah. They're going to make you qualify at whatever the true high rate is, so 8% for these scenarios we've been talking about.
Correct.
But you've had a few people interested in this, the 2-1 buy down.
Yeah, so essentially, the way I kind of think about it, and check me in the comments section if I'm wrong, it's totally fine. But the way I kind of think about it is the upfront cost is pretty equal to, and Chris was saying the same thing, we're just saying it different ways. The upfront cost for the 2-1 buy down is pretty equal to the cost of the interest for those first 2 years that you're having lowered then. So it makes a lot of sense where if you can negotiate this with the seller to have the seller pay for that 2-1 buy down then. Because then you're not paying for that out of pocket. And so basically like whatever interest would be missed in that 6% rate in our example, and then the 7% rate in that second year in our example, that's what the upfront cost is going to be. And so as you're working through this, if this is something that you're looking into doing, you definitely want to talk with your realtor and your lender to make sure the right clauses are in the contract, to make sure everything has been cleared with the lender ahead of time, to make sure that things go smoothly with that process. But yeah, just to kind of reiterate your point, the thought process of it is let's alleviate those payments up front on the front end, hoping that rates will go down in that 2-year period to a point where you can then go ahead and refinance at a better interest rate and get yourself into a permanently better interest rate. And so something to consider with on that front, you might be able to get the negotiations in place to get the seller to pay for it up front. But at some point down the road, you want to be saving up some of that money that you're not paying so that you can go ahead and pay for your refinance later on down the road, to get that permanently better interest rate. So
yeah. On that 30-year fixed, yeah.
Yeah.
So, I think to recap, really, there's a lot of options out there. There's a lot of ways to skin the cat, if you will.
Yeah.
But I think the overall just thought process is, yes, rates are high right now. Try not to get totally wrapped up around the rate. And it's so personal situation dependent that maybe now is not the time to buy. But maybe now is, if you're like, hey, I got this great job, I got to move, I got to live somewhere, right?
Yeah.
I'm pretty sure with what our rental rates are here in town, that even at 8%, you're probably paying about the same as you would renting a place for the same apples to apples type of lodging, if you will. So just don't get wrapped up around the rate. look at the whole broad picture. The ball's in your court to negotiate a lot more than it has been in the last 2 years.
Yeah.
Talk with a good lender. They're going to have a lot of ideas about how to kind of work through different things based on your specific financial situation. Yeah. And for most folks, there's still a very good way to make it happen and still stay within the comfort level that you need to stay within financially. And again, for some people, that's not going to be the case, but you don't know if you don't try. So chat with a lender, chat with a local real estate agent, give us a call if you need anything whatsoever along those lines. Because again, we just want to make sure that you're thinking through all the different options.
Yeah. And I do want to add one more caveat in here, if I may. I know we're getting a little lengthy on the video here. But one thing we didn't chat about, just because this video is focused a little more on, ideas that maybe a lot of people didn't know existed right off the bat. Price reductions are still a thing out there.
Yeah.
And so in my experience, one of the most effective things that you can do is have a price reduction with a concession. That would be, the most effective thing at the end of the day for basically running the whole gamut and getting into the house as cheap as you can and reducing the monthly costs as much as you can.
Yeah.
So that's something to keep in mind. But, a lot of times right now, especially, the sellers kind of live in the net at the end of the day, if you will. That's kind of where the sellers live and what they really want to see. And so if you can be forward thinking as a buyer and really savvy with some of these options out here, you can put yourself in a much better position than a lot of people are doing right now. So
yeah. Like you said, there's a lot of ways to do it, and it still can be the right time for a lot of people. So, hey, if you guys have any questions about any of this, I know this one was a little bit more in-depth, but call, text, email, hit us up in the comments. We're going to get back to you. If you guys want us to kind of talk through some situations with you, we're happy to do that as well. We'll get a call scheduled if that's something to be beneficial. So until next time, thanks, guys.